From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 2nd. You're listening to the HPS Macrocast. This was already a consequential day with the final non-farm payrolls report from the Bureau of Labor Statistics heading into the month before Election Day. It became even more consequential overnight with the news first that presidential communications assistant Hope Hicks had contracted coronavirus. She tested positive, and then followed a few hours later by the announcement by tweet by President Trump that he and Mrs. Trump had also tested positive for coronavirus. So pretty consequential overnight, and we'll added context both for today and for the election going forward. I think we first want to say we wish them the very best of health. I mean, hopefully I think I wanted to say I hope that it's asymptomatic. I think we're just learning now, and I think we're going to get dribs and drabs of news reports on this, that the president is actually showing some cold-like symptoms. So it's not an asymptomatic experience. It will be symptomatic, and it has additional complications. But we obviously hope that they're mild, and that the first family and people in the White House are able to get through this. I would just say, just my initial reaction after hoping that they'll be okay is just that I'm surprised it took this long. Matt and I have spent time in the West Wing, and that place is not built for social distancing. It is a rabbit warren. It is tight places everywhere. It's built for, I would guess, half as many people as are actually crammed into that space. So it is a very difficult place to socially distance. People say, well, you wear masks, and it's true. But if you talk to all the epidemiologists on this, they say, yes, wear a mask if you have to be near somewhere, but the mask is not nearly as effective as distancing. So that is a really tough thing to do. And now they're going to have to go do contact tracing on everybody who worked and was around the president and Hope Hicks, and then extend it one order further of anyone who was with them. Now they were on Air Force One together. They were on Marine One. They were, he went up to Bedminster and did a meeting. So there's a lot there. Well, we're going to get into what we think this means.
Those EEOB offices with the high ceilings and cavernous hallways are sounding pretty good these days.
Those are built for social distancing. Yeah, the high ceilings over in the Eisenhower Executive Office building are definitely much more conducive. But we did have the jobs report today. Why don't we get in those numbers? And I think it's going to inform our context for this going forward as well. Matt, the numbers were, not great.
The numbers were not great. There's so many lenses on this, but numbers, non-farm payroll rose by 661,000 in September. The unemployment rate declined to 7.9. Just as a reminder, the numbers in August were about 1.5 million, and the numbers in July were shy of 1.8 million. We are getting some diminishing returns on the, V part of the recovery, kind of tailing off, it seems, on the job recovery side. We are still in the ballpark of 10 to 11 million jobs below where we were at the peak. So in the context of peak and recovery, 661 that's not the rate we need to really dent the recovery.
Yeah, that's a really important point. And that's probably the best way to look at this thing. Yeah. The unemployment rate has, whether you're classified as looking for work, the reality is we've only got half the jobs back.
Yeah, this isn't going to get the job done. I think, you go into the numbers a little bit. There's some interesting stuff here. One thing of note, the whisper number on the street was kind of like between 800 and 900,000. People were expecting a kind of this tail end of like continued diminishing returns, but higher than where we were. It's worth noting that government employment, most sectors rose. Government employment declined by 216 in September. So if you think about that and add that, the private sector was actually in that whisper number territory, but government was a drag. We could talk about the stimulus on some of that. There's the numbers underneath that are a little complicated in that you've got some of the census effects in there. And it looks like a lot of that was driven by local education numbers. So it's kind of interesting.
Like we've lost 1.2 million state and local jobs so far. Not this month, but throughout the pandemic.
So that's kind of the highlights. Some of the particulars on this. You have the unemployment rate still incrementally higher for women than men. Women is at 7.7, men at 7.4. When you look into kind of some of the racial disparities on this, white unemployment is 7%, black unemployment is 12.1. Black unemployment peaked at 16.8 and white peaked at 12.4. What more interesting is actually Asian unemployment, which is a smaller population than either white or black, but Asian unemployment was at 2.5% kind of last fall prior to this exercise, lowest unemployment rate of all groups kind of a year prior, and then spiked quite significantly to 15%. They're at 8.9% now. That's the final job report coming into the election in kind of state of play. It's a weird, obviously, as Tony was saying, with the announcement of the president being in quarantine for the duration. It's October. We've got 1 month left till election day, and it does have a quality of like, I don't put anything past 2020 to come up with more surprises, but it does feel like the table is set.
Yeah. So one thing I will say, so at my old job at the hedge fund, I used to have algorithms that would predict the jobs number based on existing data. And I had an early one that was heavily based on unemployment claims, but also, real-time data, especially Google data. So I started running it again the last couple of months. So right now, October is spitting out negative 500,000. Yeah.
That's our friend Neil Irwin at New York Times just did some back of the envelope math. So if we sustain the current level of job creation, we won't be back to February employment levels for 17 months.
Yeah.
If we have August levels of job growth, which I think August was revised up to about 1.5 million, it would only be 8 months. And but my question on that, you kind of want to do sort of a log on that, don't you? I mean, we have a declining.
Yeah, it's a poor point.
There's no reason to expect it'll continue at this same pace. We're actually seeing a declining rate of job growth.
Yeah, and a big part of that is policy. The PPP rules of layoff end, so you're allowed to lay people off now. And for all the headlines we've seen, it's happening.
This week has featured the announcements from the airlines. Disney, very high profile announcement there of 28,000 layoffs coming, and it's not just the hospitality and entertainment industries. It's the announcement about layoffs have really
Allstate is laying off people.
But we've been talking about this for 7 months now, is that the reality, and we've had a stark reminder last night, is that we are still in the middle of a pandemic.
In the middle of it. Yeah.
And we are not going to, we can't, until like restaurants can completely reopen or Disneyland is allowed to open, there's no reason that the jobs are going to return. Like if people can't go to Disneyland, unless the government's going to pay Disneyland to continue to employ people, there's no work to do. So I mean, on some level, I feel like this is, we've talked a lot about the fact that you kind of have to, before you get back to where we were, you have to solve the pandemic. I don't think that, obviously over the intervening, 7 months, we've learned a lot, and I think that society has adopted some risk adjusted appropriate measures to be able to continue on with I mean, we can't freeze the economy indefinitely, but I don't see why there should be any expectation that we're going to get back to where we were until the pandemic is under control, which
Right.
I would say it's not.
Because you can't force people to go eat inside.
No.
I'm not going to do it.
No, and even if yeah, that's right. And in addition to that, there are many government restrictions across the country.
We'll come back with more discussion on this. You're listening to the HPS Macrocast.
Have you heard the news? The HPS Macrocast is expanding into the HPS podcast channel, which offers our listeners access to all of Hamilton Place Strategy's podcast shows in one convenient place. The HPS podcast channel is home to all of our new and past podcast episodes on your favorite podcast streaming services: Apple Podcasts, Spotify, Amazon Music, Google, and more. If you're already subscribed to the HPS Macrocast, do nothing. If you aren't, subscribe now to have weekly HPS Macrocast episodes and the latest from HPS Insights delivered straight to your podcast streaming service. To learn more about our podcasts and other original content, visit hamiltonplacestrategies.com/insights.
All right, back on the Macrocast. Look, the question is, well, what does get done? You know, so what happens about it? I mean, there's you have these twin events, which again, like to Matt's point, 661,000 does not sound like a bad number in normal times, and it isn't in normal times. We're not in normal times; we're in abnormal times, and we are less than 5 weeks away from the election. We're a month. Actually, tomorrow's a month. From the 31 days from the election, and Congress Congress is they still have an open for business sign out front today. The House overnight passed their $2.2 trillion stimulus bill, which is $1.2 trillion less than what they had passed back in May. And also, but also, I don't know, a couple trillion, almost nearly a couple trillion more than what the Senate had passed. But Speaker Pelosi has been negotiating, I think, in very good faith, but with with Treasury Secretary Mnuchin. They've had this, they've had been in contact with each other quite a bit over the past week and the past hours. They have both in the past hour announced that they are each COVID free. They've tested negative, so that's good news. But they had to do that because they've been spending so much time together, so make sure neither of them have gotten it. So there is a closing window, but it's still open to get something done right now. And my sense has been that you take these combined events, not just that Trump has gotten COVID, but that we have added just another layer of volatility to the near-term future. Nobody knows what this is going to mean. Anyone who says...
Well, we do know one thing. He can't campaign for 2 weeks.
Yeah, well, or a different kind of campaign, right? So
you can't go outside for 2 weeks.
Maybe he'll become... do much more Zoom and other things which he has no choice to do. It's thrown. It's going to cause the Biden campaign to rethink their strategy. They have had a very hard-hitting, negative, and personal campaign on Trump, and they've been very quick on it too. Trump says something, and they've got digital ads out sometimes within an hour or two. Just like really quick, able to turn around ads, and they're all very personal because this election has been a referendum on Trump, as almost all re-elections are. They're a referendum on the incumbent, and so that has been a very effective strategy for them. It's not unusual for a campaign to pivot late to a positive message, to leave voters with a positive message about you and what you plan to do. My suspicion is that that's where Biden is going to have to go much earlier than expected. You do not want, while the president is dealing with, especially at his age, dealing with a potentially deadly disease for him to be out there running negative ads, whacking him. It is a very bad look. It's probably not effective. So, if I were in, Biden camp, I would be thinking about like, what are the positive forward-looking policy messages that we can do from this point on, and just saturate. They should press their advantage on the ability to have Biden out. That's not unfair. Some people said, well, should he stop campaigning while the president's quarantined? I think no. The answer is no. He should still go out and do his thing.
The train campaign seems to be going well. It seems like a good idea.
Yeah, and he's usually on the train anyway. So.
Yeah, that's his thing.
So I don't know. Look, my guess, and and there's not hard to have like a high degree of confidence on any of this, but my guess is that there is going to be an added effort. If I'm members of Congress right now, if I'm the GOP on the Hill right now, you could go two ways on this. I think one is you can say, this has been a disaster, right? This is like, this has been Trump has been losing. He's losing badly. Now he's not able to campaign. And there is some embarrassment in contracting COVID because of his attitude towards things like mask wearing and having the rallies and speeches without, with large crowds and things like that. So if you could say like, well, look, things aren't going to get better for Trump. We need to go our own way and plan for the future. That's one way to go. Another way they can go is to say, look, there's an opportunity here. Like, you need something is going to be disruptive. We needed something to be disruptive. This could be the thing that is disruptive in the way people, think about things. We can go past, stimulus bill, which would be beneficial, not just to Trump. Trump would be able to say like, look, see, I can still govern. I can still get things done, even while I am, quarantining, and, it can go and even do, you can even have a virtual signing ceremony if you want. And then, and just go do that and go have that message of getting things done. So, you could see that. I mean, you see it going either way, but it's going to be, it's hard to anticipate just how people are going to read this. I'll say one thing. This isn't completely in the dark. Boris Johnson got COVID back in April. His approval rating spiked when he contracted COVID. Now, like, nothing has been able to move Trump's approval or disapproval ratings, right? They have been in a narrow band for as long as he came down that escalator in New York back in June of 2015. It would be interesting to see if there is this sort of, sympathy towards the president, and if that happens in this last, in these last few weeks. We have we have been able to see what that did with Boris Johnson. It was not long lasting, but we're a month out from Election Day. It doesn't have to last long.
One of the other examples from the Boris Johnson episode was that we only found out after he'd recovered just how serious it was. The disclosure about
he was banged up pretty bad.
The disclosure about his symptoms was very incomplete, and analysts are certainly expecting the same kind of maybe selective disclosures from the White House on this case.
Yeah, but I mean, in terms of the relief bill, I just, Wayne Gretzky said I would skate to where the puck is, not where it's at. I just can't accept that when you combine everything, A, it's needed. The debate did not go well. Now you have COVID, and the Democrats are letting you send every American a check a month before the election. I just can't accept that we're not going to get a deal.
Yeah, I mean, one question is did they wait too long, right? So even.
But they probably have, in terms of getting the checks out before the election.
Yeah,
and also for the economy. Yeah.
I've always wondered if Trump actually knows that the proposed deal includes like big checks to send to Americans, because I feel like that would be something he would be really into.
Right. His name's going to be on him, right?
Well, no, actually they won't. Mnuchin already said that they're going to do direct deposit, so they're not going to waste a month with the checks.
Yeah, well, they do have they do have experience with it now too. So that it is a little bit, easier to do. It will, if they do not get it done, it will be one of the great mysteries as to, how they missed, hitting this, big fat pitch right down the middle of the plate. But we'll see. I still, as I've, said on this podcast many times, I still lean into the likelihood of them doing it, even in this, very, very late hour of without it getting done. I think, negotiations usually do go down. Really good negotiations, I think, go down to the wire.
Yeah.
Everyone can squeeze out as much as they can, and they can show that they have fought as hard as they can. And then each side has taken the last best offer that the other side can give. That's not unusual in any negotiation, and that may be the case here, or it could be that, it's 2020 and politics are as screwed up as they ever have been, and people don't necessarily do smart things.
Tony, do you think that the announcements of the litany of permanent layoffs that went out this week were the final tip to kind of push people to get something done? Because most of the time with these types of things, we saw it in the financial crisis, we've seen it over time, is that there has to be some sort of external forcing mechanism to kind of say, hey, time's up. This is it. Yeah, I'm wondering if some of the announcements this week were provided.
No, I agree. So Congressman Neal said that Powell's testimony that he's really worried about the economy was part of the driving force for the Democrats to come back to the table and put something on. And since then, we've gotten more negative data points, which I just have to believe that people are paying attention to.
Yeah, I mean, if you look at, the numbers, Matt, right? I mean, we saw, so temporary job loss, fell by 1.5 million, but permanent job loss up, increased by 345,000 up to 3.8 million.
But that's just in the report, and that's going back a few weeks. I mean, I feel like part of the thing is like this week, big companies were announcing thousands of layoffs. Like you tally all that stuff up, and there's also some psychological aspect to that in terms of members hearing that, and what are the operations in their districts, and kind of like it just feels like the time's up.
Yeah,
and from the market's perspective, September was a relatively rocky month for the stock market, and that is certainly something that this administration focuses on.
Very important point.
Directionality of the equity markets, it catches attention on Capitol Hill as well. And for
September, John, was that down a % or two, maybe?
Well, we're the highs of early September. I think the S&P 500 is now, it's rebounded a little bit, so it's only down about 5% from. But we had a correction, which was about 10% down from the recent highs, from the all-time highs in early September.
And that was the market, where tech stocks were down 20 to 25%, which is really the market.
And so that elevated volatility may have been another contributing factor to focusing minds on Capitol Hill and in the White House toward getting more stimulus done. And on the market perspective today, obviously this the news overnight, S&P 500 futures were down quite a bit, but it's not panic time in financial markets. No. This is something that is it's certainly weighing on risk appetite, but when you look at the losses in equity markets right now, they're relatively restrained. Yeah. The dollar is steady, treasury markets are steady. This isn't shaking the foundations of the global financial markets. It's obviously elevated the uncertainty around U.S. politics and policy, but it was already so high to begin with that there's a sense that market participants were bracing for volatility around the election, and this has upped the ante, but isn't really any different directionally than where they were thinking, which was higher volatility over the coming months.
I feel like only at this point in our evolution that computers are the only people that trade futures. So the fact that the future is down, I don't think I'm going to wait till noon to decide whether the market is trading off of Trump COVID.
Yeah, that's just an algorithm reading what exactly?
The president has a virus that
Yeah.
equals negative. So sell.
Yeah, I don't know. That's
I'm not being funny.
No, I know.
That's actually, we have a huge amount of algorithms that are trained to read, words, and they just put on trades based on it.
There are, look, I mean, it seems like everybody in Washington. I was watching a little debate on Twitter yesterday about how Washington and New York and Wall Street don't understand each other, and that's always been the case. But there has been this view in Washington that if only we can get a really good, market sell-off, that will spur action by Congress and the White House to get something done. And I think that misreads both like the markets and Washington also. I don't think it's enough to actually get anything done. We need to see some things in the real economy, like the stuff Matt was talking about, which are actually brand name companies announcing significant layoffs. Like that's a real thing. And you can point to it and account for it. I don't think the idea of like how the stock market is doing has the same kind of relevance as it did, 10, 15 or 20 years ago. I think like especially the Dow, because it's the most widely, reported. If you go, if you're looking at local TV news, they're not really reporting the S&P. They're certainly not reporting broader indexes. They throw the Dow up there, and the Dow is either green or red. But like the size, the magnitudes of up and down, I mean, would have to be, aside from those early weeks of COVID shutdown, people are kind of immune to the ups and downs of the market these days. 400-point day up. I mean, the base is so big. If we have 400, 500, 600 points, just isn't that much.
Right. Yeah.
And people have seen like wild swings. So I don't know. I think they're looking for signals in all the wrong places. They should be looking at, what are food banks doing? What are the rate of bankruptcies in your district? Or are shops shuttered, or are they? Yeah.
How many restaurants have closed? So in terms of the job announcements, the one that really worries me about the future is Allstate. So they do car insurance, and they've been doing really well. They've actually been returning money to people because you're not driving, so you're not getting in an accident. So, they've been returning money. But the reason that they're laying off people is because they think that the next 6 to 12 months are going to be the same, and they don't need as many people to go out to see whether you're trying to do fraud with your accident. That's a bad sign. This is a company whose stock has done really well and whose profits have done well because of it, but also sees we don't need as many people because people aren't driving.
Yeah. It's funny, speaking of cars, so it's interesting. I was just, Ford reported sales today. So sales of F-Series pickups and SUVs, it says it helped it outperform, but it reported that its vehicle sales for the third quarter were only down 4.9% from a year earlier. So have we calibrated correctly what this means? I mean, GM, Fiat, Chrysler, and the overall industry were down about 10% year on year. I mean, so it has been strong, but only because we expected it to be, we shut down plants for a while.
Yeah, and then it became the reality that you don't want to go on a bus. I mean, in DC, the buses are completely empty, and so is the metro. So people bought cars to get to work because you don't want to take public transportation. So we basically have no used cars anymore. All the inexpensive used cars have been bought up. Mm. And then now we need to start catching up on the new cars. I mean, that will have an equilibrium. I don't think it's going to be keep going it, but the car companies thought they should shut down, and then they had to catch up because people actually want to buy cars because you're not taking public transportation.
I kind of like not having a car payment right now. It's been really well over a year now of no car payments. Has been really wonderful.
It's freeing. I hate driving.
I love driving so much, but I also love public transportation.
Yeah.
Been on the buses here in New York City, by the way. And, they're fine. And the subways and the Uber.
Are the subways busy?
No, they're not. And I think it's, they are busier than they were. They have definitely increased, passengers. I know, some of the offices, some of the banks in particular, downtown and midtown have started having, workers come back at rotation. So, a number of them are using public transportation. So it is definitely picking up, but nothing close to.
I forget what the occasion was, but I was in New York just when it was kind of coronavirus hadn't hit the US, but I was like, I had my it was very early, right? So the New York outbreak hadn't happened, but I had my suspicions, and I forget what I was up there for, but I did ride the subway, and it gave me the heebie-jeebies a little bit. And I was wearing, I wore my like winter gloves, so that I could be like, yeah, I'm not crazy about germs, but
yeah,
but I have gloves on.
I agree. And then, learning since then that, that like surface transmission
right.
is not high. Like that helps. It really is that, like, you are at a subway, you get to a stop, and you are monitoring people getting on and off, and like trying to distance on a subway train.
Yes. But you got to get out the doors before they shut.
That's true. That's true. Well, there's a lot of adjusting. There's obviously a lot of adjusting left to do. So we wouldn't even talk about the fact that, we're in the midst of all this. The Senate is still going to be trying to get a Supreme Court nominee done as well. This is going to be one of the strangest months in history, and totally on brand for 2020. But we also have. Do we have any other insights on the economy that we have coming up in the next week or two, John and Brendan?
Well, we did have one interesting data point this week was the inflation rate. We got it was yesterday that came in, and that was
the market didn't pay enough attention to this. This is a really important point.
Yeah, so the Fed focuses on core personal consumption expenditures prices. It's a kind of a mouthful. They call it core PCE prices, or core PCE just for short. And this is with the Fed's new formulation fresh in everybody's mind, the 2% average over some period of time, some unspecified period of time. The metrics had been so far away from it that debate almost seemed kind of academic. It almost seemed, when the Fed debating how long should we allow it to run over 2%. Well, this metric has been over 2% hardly at all in the last decade. And so it was kind of had this quality of how many angels can dance on the head of a pin sort of aspect to the debate that the Fed seemed to be having. But yesterday's number came in hotter than expected.
Yeah, so we're at 1.6%. It up from 1.4 and up from 1.2 at the lows. And also it should be pointed out that the CPI is heavily weighted towards housing. Almost 40% of the core CPI is, but the PCE has different weighting. So housing is only 20% in core PCE. So housing's obviously doing well, which so getting a little wonky. Rental prices are going down, house prices are going up. So we measure the rental prices, not how much your house is worth. So that deflationary part of the way we measure is less pronounced in the PCE. So the Fed, if we have 0.2 month over month, which is what we had a 0.4, we will be at 2% year over year in December. And that's what the Fed thought would take 2 to 3 years to get to.
Yeah, it'll be interesting to see if their new formulation gets tested earlier than
right. And they said that they want to have sustained over 2% so they have that going. And you would have to have a lot to keep it above 2% for a while. But in terms of messaging, which is really what the Fed has as their tool now, that could get a little confusing.
Well, more to consume on that. That's for sure. Well, look, I think why don't we? I think we're leave it there. I think that's all we can. We packed in a lot.
We packed a lot in this week.
So an adventurous week, another adventurous work. I mean, we would have expected next week to be talking about debates. We have no idea what's going to happen with debates, and so there's a lot to learn over the next.
Well, this could be the best if we do remote debates. You actually can mute each other, so it might be the best thing that happened to the debate.
It could be. In that case, I would recommend adding more of them.
Mm-hmm.
Right?
Yeah. What else you got to do?
What else you got to do? Right? Sit at home and debate. I think it'd be amazing.
So, Tony, it's Friday. By tonight, are we going to have a deal?
I'm sticking with my prediction that we will have a deal.
I agree. Yeah. Matt, do you agree?
Whether it's tonight, I don't know if it's tonight, but
I mean, not tonight, but it could before they go home. Yeah,
it could be. It might take us through the weekend, but my expectation is that they are going to get a deal. No one else is going to venture a guess, are they?
No, I 100% agree. We've been with you out of consensus. I just can't accept that you're not going to. If Trump says yes, the Senate will follow, and it's completely illogical to me to not send out checks before.
I would say my reporter friends on the Hill think I'm crazy. But but that's okay.
But they're looking at the trees, not the forest.
There you go.
Well, I mean, this White House has never really been particularly doctrinaire about, fiscal rectitude. It's just not what, it's not in the mindset of the president. He's very comfortable with debt.
That's why I'm surprised it hasn't happened already. What is the hang?
I know. So we're talking about $1.6 trillion, and we're arguing whether it should be 1.6 or 2. It's completely irrelevant. The numbers have gotten so big that they almost are small. Like we're trying to be fiscally conservative.
Yeah. Not only that, there are tricks to do to make it a little bit more palatable and to deal with some concerns that these guys might have. Which is you can tranche it, and like I've been saying this for a couple months now, just like put some triggers in, put the money in tranches.
Easy.
Yeah, we did this with TARP, and so if you want to maintain control and, point to the small, one side could point to the smaller number, the other side could point to the bigger number, whatever, but we have learned, one thing we've learned is that like some of this money really doesn't get spent.
Right.
It's been hard. It's in a dynamic environment. It's hard to anticipate. Like the Main Street lending program.
Right.
So
especially for the state and local, just put in triggers. If you need it, here it is. If you don't, you don't get it.
Right. But we're not running the world yet. And maybe that's all that's really needed if we were doing this.
Yes. Pretty soon I'm going to be the senator from DC. So,
okay.
Right.
All right, guys. Great Macrocast. Great Jobs Day. Have a terrific and healthy weekend. Wishing the first family and all the staff in the White House good health as well. We'll see you next week on the Macrocast.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.